Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, with Momo and FOMO pushing share markets ever higher, Jason McIntosh, a motion trader, looks at the technicals on the ASX 200 to see where it's likely to go next.
Prices have been consolidating for the last couple of weeks now, and that follows a strong move higher around the middle of the month. That breakout that we had a couple of weeks back, that followed 5 weeks of consolidation below the June high. So you can see that blue horizontal line I've got on the top right of the chart. That marks the June high, and then from there you can see the most recent breakout a couple of weeks back. I think the latest breakout is confirmation that the path of least resistance remains to the upside. And it's interesting to look at the lows throughout that recent consolidation. You can see that blue upward sloping line I've got there, and you notice that connects several lows. So what that shows us is that we're progressively getting higher lows, and that's a telltale sign that buyers continue to increase their bids and are paying up to get into the market. Just looking at the last couple of weeks, I think it's generally positive that prices have been steady and they've been holding on to those recent gains. It just gives the market a chance to digest that latest rally, and it also helps to start to build a platform for potentially another leg higher. I think the key takeaway when I look at this chart is prices above those rising moving averages.
Well, for a look at two stocks which have been under pressure on the local index but which show promise, Michael Gable from Fairmont Equities gives us his technical analysis of Mineral Resources and CSL.
Hand side there, that looks like an inverse head and shoulders, which is essentially a reversal pattern in this case. I think the low's in for Min. I think dips will be bought, and everyone hates it, so it'll surprise everybody. But yeah, it looks like a trading opportunity right here.
Well, and similarly, CSL's also one of the largest stocks, of course. Now we can see that trading range. Is that likely to change, do you think?
I hope so. So CSL's one that we picked up a couple of weeks ago. We got out of our CBA, picked up CSL. It's bounced off the bottom of the range. As a minimum, I think it will head to levels above 300, which is the top of that range, and then we'll reassess. If it breaks out of that range, look out, you'll end up with a massive move because it's been range bound for so long. But look, for the moment, further upside to levels above 300.
Meanwhile, the gold price has resumed its upward trend, having consolidated recently. Signs of weakness in the US jobs market has prompted bets that interest rates will be cut imminently, which has boosted buying in the non-yielding asset. Here's Michael Gable's technical take on the precious metal.
I think the longer term catalyst with gold has been, central bank buying. There's been some big money flowing into gold over concerns of the US sort of debt situation. But yeah, in the short term, we've had those events on Friday. The US dollar came back, and that's a positive for gold. So essentially what I'm seeing with gold here over the past year is, we've had that uptrend. It spiked in April, of course, on the back of all the tariff situation. But since then, it's been trading sideways to consolidate that big move in April, and the range is tightening up. So the key part of this chart is the range of gold has been tightening up. To me, this just looks really bullish. So it looks like we're getting close to gold breaking to a new high and then making a run. And as I mentioned with you earlier this year, Andrew, on this show, I think gold will have a 4 in front of it.
Well, that is it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.